Here we have the 15-minute price chart for AMC Entertainment Holdings Incorporated, stock ticker AMC. Here we can see that we're giving back some of the gains that were posted yesterday. This might be a bit concerning to some people, but I do think that the so far the damage here has been relatively limited. I wouldn't be too concerned about these types of moves just yet. We have posted lows at roughly, let's get an exact number here. I'm seeing lows of $5.30 from earlier this trading session. But for the most part, we are currently being caught by the 50-period exponential moving average. That would be this orange line here. So as we can see, there's currently some support that's forming here, and it is coming in line with a moving average. So this is encouraging because that moving average itself continues to rise. And when we look at the longer term moving averages, the purple line would be the 100 period moving average, and then the blue line would be the 200 period moving average. We can see that both of these are also moving in the upward direction. So as long as we continue to find support with these moving averages, it does currently, it looks as though these coming declines here are going to be somewhat limited. We do have to point to the fact that with this rally, this was a strong move higher to start the week, and we do have to point to the fact that we did reach into overbought territory as this happened. It's fairly heavily overbought territory. We're really looking at levels of above 86 in the relative strength index reading. So, just a quick summary of that. It's the relative strength index goes from a scale from 0 to 100. Readings above 70 would be considered to be overbought. And then readings above 90 would be considered to be extremely overbought. So we're not quite into the extremely overbought territory, but we're pretty close. So it's not really surprising to see a bit of a corrective downside movement here to kind of work off this indicator reading, which we have done. I mean, as you can see here, we really have moved back toward the midpoint of this histogram here. And we're currently looking at levels of roughly just above 56. So that's perfectly fine. And that does mean that we can continue to extend higher from here. So overall, the question is whether or not, this longer term price movement here, this overall structure here, whether or not this is likely to continue moving in the bullish direction. So this is kind of the $64,000 question here. So when we start to look at when we start to compare the trading activity last week to the trading activity this week, what we really notice here is the fact that last week was really characterized by a lot more sideways trading activity. We can see that things are kind of operating in a range here. We're sort of oscillating around the moving averages and things like that. There's really not much of a decisive direction that can be found if we're looking at last week's trading activity. But a lot of this is due to the fact that yesterday had a significant holiday. July 4th was on Thursday, and markets were closed this day. And you see this a lot during the summer, where if markets are closed toward the end of the week, like a Thursday, many people pull their orders out of the market, and those orders don't come back into the market until the following Monday. I mean, people just sort of take off the Thursday and the Friday, and a lot of orders are removed from the market. So what that really means is that, the market as a whole is not trading at full strength. So, that often does result in this kind of sideways, kind of mundane trading action that really isn't characterized by major trend activity in either direction. So, the real question when you see this type of activity, the real question is, how does the market respond or react when markets do return to full strength? Anytime you're dealing with a trading range like this, it represents a period of indecision, and it suggests that the market is not exactly sure where to go. But when you do see a breakout from these types of trading ranges, the moves do tend to be forceful. They tend to be much more forceful than the trading activity that preceded it. So, even if it is to the downside, you would expect to see a larger downside move. But if you see a break to the top side, then you would expect that move to the top side to be larger, than the trading activity that was caught inside of this more mundane, indecisive trading range and things like that. So, as we can see here, that action, that price action, that type of outlook did come to fruition here. We can see that, as markets did return to full strength, we did see a decisive price move in the upward direction. And, I do want to point to, this down here, this kind of these green bars down here, which indicate these are trading volumes. So this is the amount of buying and selling that's going on in the market. And as we can see here, the prior week's trading was kind of thin, was not very strong, especially into the end of the week, which is exactly what I'm saying. It's, this Thursday holiday, people really don't come back on Friday. They just come back the following Monday. And then we can see that once markets do come back to full strength, here we are, bang, we see this high surge in share prices. So, all of this sort of creates kind of a more volatile trading situation. And it does kind of make things a bit more erratic because you're seeing two different types of price environments here. You're seeing this holiday thinned environment, and then you're seeing markets, suddenly come back to full strength. So, all of this here, when you see all these things combined with each other, this is going to create an overbought trading condition. So, in most cases, people would be pointing to this overbought indicator as a reason to be concerned. But what I'm saying here is that, when you combine all of these factors, you've got two different types of trading environments here. And a kind of a quick change in trading environments. It's not surprising to see this kind of indicator reading when you've got two different trading environments like this. It's sort of night and day kind of a thing. So, and we're trading above 86 in the relative strength index. I mean, that is extremely high. So what I'm saying here is all of this is kind of distorting the overall trend picture here a bit. You're not really seeing like uniform moves here. You see a quick move to the top side, and before that, it was a kind of a more boring period that was, a more boring period where we were trading sideways. So, overall, but for these reasons, this is why I'm not so concerned about this overbought indicator reading or these declines that we're seeing currently. I think this is all explainable due to the recent trading action and the fact that the change in market environment is really what led to this extremely overbought condition. So, at the moment, I do think that we're kind of forming a base here at roughly 530. As long as we don't start to move this moving average support here, this 100 period EMA and this 200 period EMA, the outlook does remain positive here overall, and I do think that this upward price trend, this overall bullish structure here, does remain intact, and we would expect to see higher highs here into the later parts of this trading week. So here's the current market analysis for AMC Entertainment Holdings Incorporated, stock ticker AMC.